I know the price of success. Dedication, hard work, and an unrelenting devotion to the things you want to see happen. Frank Lloyd Wright. My friends, all we ask is 10 to 15 minutes a day. That is the price of success. Dedicating yourself, working hard those 10 to 15 minutes, and unrelentingly devoting yourself to putting that time forward each and every day the market is open. That is what it takes. Not 3 hours on a Sunday, once a month, or 4 hours every day and you wear yourself out and soon quit. 10 to 15 minutes a day, dedicate yourself to it. Fill out your daily market worksheets on every day. But today, this is the weekly review and forecast. So you fill out that weekly market worksheet. At the end of today's video, I'm going to put all three of the links to the worksheets, the videos. You'll see in those videos, you'll see in the show notes links to the worksheets. They're also published every day at chartingwealth.com. And if you're a subscriber, which you should be, because then you get the special trainings we put out every day and the daily reviews and the weekly reviews each day that they come out. And of course, the special training today for subscribers is finding your own aha moment. So make sure to at least go through the weekly market worksheet so you understand how that works today. And print yourself out those PDFs. You can also order a spiral bound copy, but you don't have to do that. Print them out for free and start filling them out. And again, supercharge your training every day, going through the trainings we put out. Practice trading when practice trades are available using the trade worksheet. Filling out the daily market worksheet 4 days a week, the weekly market worksheet on Fridays before Monday. And my friends, you will supercharge your training. Let's jump into these charts. Stocks are mixed. The S&P down 0.51%. The NASDAQ up 0.35%. And as we jump into these charts, what do we see happening? Well, if I move out of the way first, this green, the blue crossover, let me just show you. We have a green up candle with a long wick on the top. However, price percent oscillator still negative, actually pulling away from the red signal line a little bit. Derivative oscillator still losing a little bit of downward momentum. Let's go to the 2-day. That is where you see the 2-day has crossed back over going down. So it is a 2-day recross going down. It went up and then it crossed back over, giving you an opportunity to practice trade a down move. After 6 days of up movement, we see that the last 2 days is a spinning top, a solid red spinning top. Lots of indecision, tending down. Derivative oscillator still a little bit green, but that price percent oscillator did cross over. Not a strong down day, but as we look at the half-day chart, we can see where things really topped in the morning on Wednesday, then sliding sideways and devolving, particularly in the morning on Friday. So that is where we are on the S&P 500. These markets still struggling to make higher highs, still, of course, in what? A bull market. Until we go out of the bull market, what you will see is pullbacks and then legs up until the market finally dies. Has it died already? Don't know that. We do see that the weekly is in a crossover going down still, and the 2-day just joined it again. Now, let's step away from the S&P, go to the NASDAQ 100. It, of course, crossed over going down back on the week ending Friday the 26th of February. 2 strong down weeks. This last week sliding sideways, sitting right there on the weekly trend line with almost a doji, a little green up movement there. But again, let me move out of the way. Why am I not getting that? Let's see. Okay, I'm trying to... Oh, I know what that is. That's a trend line. I can't move that very easily. We'll see that in a minute. But what we see happening, now that I got it to go away, what we see happening here is lots of up movement during the week, but where things settled out on our Heikin-Ashi candlesticks, price percent oscillator still going down, derivative oscillator gaining downward momentum. We go to that 2-day chart. What do we see there? We can see where the 2-day had started with up motion over the course of about 6 days. And then, of course, these last 2 days moving down, we see on Thursday and Friday. although we still have price above that weekly trend line. But we see that again, red down candle, all that movement in the downward direction. Look at the half day. It crossed over going down in the morning on Friday, continued in the afternoon, but again, overall for the day, up 0.35%, but still we see price with that heavy overlay of down movement on the 2-day and the weekly. So we'll continue to watch and see where these markets are going, if indeed things are slowly percolating to an end or if it's just gathering its breath for another fresh up move. We'll wait and we will see. Let's go to bonds. Bonds up for the day a little bit, 0.62%, but we can see it was a big down week for bonds, reaching a lower low, solid red down candle. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. 2-day chart, again, continuing to head down, hitting a lower low below both the weekly and the 2-day trend lines. Derivative oscillator gaining downward momentum. Half day, this is where we see where things bottomed on Thursday, sliding sideways and gaining some momentum on Thursday afternoon, and then Friday morning and afternoon pushing through, of course, the weakest of our trend lines. The half day still well below the weekly and the 2-day, and of course, we had that 2-day recross that has done quite well for us for many weeks now, since the beginning of February. And again, still have all that downward pressure on bonds. In fact, you see it accelerating a little bit. So we'll continue to watch, see how long this trade allows us to go. As I keep saying over and over, taking your profits, reaping those rewards in your practice trades is always fine. What you have to do, though, is at the beginning of jumping into your trade is setting your position, setting your profit and loss bands, and understanding what it is you're seeking from the get-go. That's what you note on your trade worksheet. That's why filling out those trade worksheets are so important. Setting your profit and loss bands, making sure you know what you're doing and why from the beginning. Otherwise, you're just gambling. That is not what we do in our practice trades. Now let's go to gold. Gold up for the day a little bit, 0.42%. We look at gold and we can see we have a green spinning top this week in gold after many weeks of down movement. In fact, we haven't seen a green open box candle since the week ending the 8th of January. And again, when did we have the weekly vertical crossover going down in gold? All the way back on the 11th of September of last year. Now, when's gold going to bottom out and head back up? I don't know. We saw things bottom out back on the week ending the 4th of December, and then up for 5 weeks, and then rolling over for this latest down move. We'll just wait and see. I'm ready to jump into gold whenever it wants to move up solidly, whenever we have a weekly vertical crossover. I'm going to be looking for it. Isn't happening yet. We see that price percent oscillator flattening a little bit, derivative oscillator losing momentum for the first time in many weeks. We go to the 2-day chart. What do we see there? Well, we have what typically has to happen before you have a weekly vertical crossover. That is a 2-day cross going in the opposite direction. We'll see how long that goes. The derivative oscillator also flipped over. That happened on Friday. Now, that is not a jumping in point. That is a signal that we see some movement in the opposite direction starting off on our intermediate chart, the 2-day. That typically precedes a weekly vertical crossover at some point. Now, doesn't have to happen. We could see a failure in this and a recross going in the same direction as the weekly, which is down. That give us a jumping in point for more down movement. So again, we'll watch, wait and see. What about the half day? Well, that half day crossed over going up back in the morning on Tuesday, the 9th of March. And again, slowly moving up, pulling back a little bit, and then continuing to move up. Just penetrated at the end of the day that weekly trend line. So we'll continue to watch, see where gold goes. That's where we are on our 4 big charts. Let's take a quick look at Bitcoin, up 0.36%. Now, that's not much of anything for Bitcoin. Did it in the week with a weekly vertical crossover going down It did not. It did not. It did not cross over. It looked like it might throughout the course of the week, on and off, but it didn't happen. So the derivative oscillator is still negative, been negative for a while, but that price percent oscillator is still positive. Now, is that crossover coming next week? Don't know. What's up with the 2-day? It's flat on the price percent oscillator, derivative oscillator, just barely negative. Green up candle for the week, reaching a higher high. That's good to see, but not enough energy to cross over going up for a 2-day recross to get us back in. So we'll continue to watch, wait and see. We can see that the half day is positive. So we'll see where Bitcoin goes over the course of this next week. That's all we have for you today. If you don't have our book, hope you'll purchase it. We're here every day for you. We're here 10 to 15 minutes every day. We ask you to do the same. It will be worth it. You can do this. I'm your biggest fan. God bless, all the best from the whole team at Charting Wealth World Headquarters.